Hello, welcome to my YouTube channel once more. It's Kev SMC, and I know it's been a while since I last uploaded any content. Reason as to why it's because I've been busy doing other things in life, and yeah, here we are again. So I'll be consistent in uploading more content for you guys, and I hope it will be worth planning. So today I'm going to share with you what have been the strategy that I've been using, and I can confidently say that it has a higher win rate, and hopefully you'll learn something. If you're an SMC trader or just a trader, I hope you learn something out of it. So let us go straight to it, and I'll later show you from my live trades, my live charts, the trades that I've taken recently. So I'll explain. I'll start with drawing a structure. So ideally, as you can see, a break of these are break of structures heading towards the downside. We can consider this as a downtrend because price is breaking previous lows, and the previous highs are being protected. So these are downtrend. So it's until when price will come and close above this high, this when you can consider, it's when that we will consider, it's when that we'll consider as a market strategy shift. It's a change of character. So it's not just a week, but a candle closure above this high, like this, and then you can look for entries at this zone based on your criteria. For me, I usually wait for when I see when the market has changed character. I usually look for this low, which will be my area of interest. In that, I look for a fair value gap and a valid order block. So a valid order block is that which there is a fair value gap around there, and it has taken liquidity. Yes, liquidity has been taken out. So now what I usually do, I'm just going to show you how I've been doing it, and it's an A plus setup actually to me. So what I usually do, I just combining a little bit of price action and SMC. So for SMC traders, when you do this, you'll know it's liquidity lying above this trend line. So for a price action trader, you'll wait for a break of structure. Not a break of structure, but you'll wait for price to break above this trend line, and most of the time it's always a trap, but either way, do you. So you should just do what works for you. So this is what works for me. So I'll wait for price to break this trend line, just a little bit of price action, it's not the whole part of it. The whole concentration lies on the SMC part. So I close above this higher low, consider it as a change of character, and then we'll wait for price to sweep. When this low has been swept, now and there's a fair value gap here under order block, so I'll consider this zone valid, and I can take a trade from this zone. Sorry, I can take a trade from this zone and aim whatever high, but for me I lose aim for just 1 to 3 RR trades. Okay, now let's go straight to the charts. So now, as you can see, this structure here, there is a series of break of structures, break of structure here, break of structure here, there's another break of structure here, break of structure, break of structure, and price came, and then there is a market structure shift, but this is now internally. There is a series of break of structures internally heading downwards. As you can see, this is internal break of structure here, 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 and then let me zoom in. Here is not a break of structure because there is no candle closure. We can consider this as a liquidity sweep, internal liquidity, because the external liquidity has been swept here, as you can see. Now let's go straight to the point. So I usually not use trend lines. Trend lines are just, I usually use trend lines just as I explained, just to aid me in knowing it's a confluence actually, but it's not the main thing. The main thing is just a smart money concept. Now, so internally, as you can see, there is a break of structure, break of structure, break of structure, until price came, took out this low here, and then came, broke this trend line, and then closed above, as you can see here, closed above this high here. And then what I did here, I'll just wait for price to come to this zone. As you can see, there is a, let me just remove it and I'll mark again. There is an FVG here, and then there is an order block. So this just and then where this order block is, there is a internal liquidity was swept and then external liquidity was swept. That is confidence enough to tell me that I'll be confident to take this trade from this particular zone. So I'll place my trade here, that order blocks at that order block, and then my stop loss below just this low that liquidity has been swept, and then I'll target 1 to 3 RR. Yep, there. And then let's just look, let's study how price behaved after this break, this change of character. Price came, bounced off this order block, came, there's another break of structure, price came, and then this is where my take profit hit, and I made 1 to 3 RR, left the market. Now another example here, as you can see, there is a break of structure internally, then break of structure, then price came in. There was a series of internal downtrend here internally, break of structure to the downside, break of structure, and then this one is a liquidity sweep, external, that is. So what I did is was to draw this trend line here and wait for price to break. As you can see, price here broke this break of structure, this trend line, but then came in, took liquidity, came, broke again out of after taking liquidity, broke again, bounced off the trend line, and then there was a break of structure here, which ideally it's a change of character because we were on a downtrend internally, so we're anticipating this change of character tells us that the market direction is going to shift. So I came, let me just remove for easy explanation. I came, this zone now becomes my area of interest. As you can see, there is an FVG here, and then order block, an order block. So now for this, as you can see, this order block took out liquidity, previous low was taken out, that is internally, and then externally you can see liquidity was taken out at this zone. So now that supports my buyers now, and then I'll come place my trade here, and then my stop loss just below this, and then I'll target 1 to 3 RR, which is that, yeah, 1 to 3 RR. So now let's see, price came here, it didn't came below, and then went up. Here is when it hit my take profit. Well, so another trade I took was here, a break of structure, and then this low was taken out, as you can see, I've marked here, taken out, and then there's an order block here, as I've drawn an order block here, and then this is the break of structure. Let me label it break of structure. Now this internal liquidity was taken out, external liquidity taken out too, so this one is protected. So I'll come put my entry here, and then my stop loss just below this zone, and then I'll target this high till 1 to 3 RR. So price came, that's my zone, and then boom, that's how it hit take profit. So yeah, I hope you've learned something. It's that simple, SMC structures, and then with a little support of what do you call it, price action, which is just drawing of the trend line. It's just as simple as that, and I hope you've learned something. It's a very valuable thing to me because this is what I've been using for the past years. So yeah, I hope you've learned something, and I'll be uploading more content on the same. And just on the comment section, kindly type what video you would like me to make next, and don't forget to subscribe, share, and hit the like button. Thank you, and may God bless you.